Good morning, everyone, and welcome. I'm Angie Whitcomb, President and CEO of Hospitality Minnesota, and I'm so glad that you've joined us here today for this important webinar on preparing for Minnesota's paid leave. As you know, starting January 1, 2026, Minnesota Paid Leave will provide payments and job protections to employees who must take time off to care for themselves or a family member. This is a significant change that will impact all of us in the hospitality industry, and we want to make sure that you have the information and tools you need to prepare. I'd like to thank the Minnesota Department of Employment and Economic Development for asking us to partner with them on this session. DEED has been a great resource to us as we work to help our industry understand and navigate this new program, and their expertise and collaboration have proven invaluable. Today, they will walk through how the program works, discuss exemptions for seasonal workers, and answer your questions so you can confidently understand and meet your responsibilities under paid leave. Our presenters today are Greg Norfleet, Director of the Minnesota Paid Leave Division, and Jim Hegman, Director of Minnesota's Unemployment Insurance Division. Thank you for taking the time to be here. I'll now turn it over to Linda Miller from DEED to get us started.
Hi, everyone, and thanks so much for being here. As Angie said, my name is Linda. I'm the Public Engagement Manager for Minnesota Paid Leave, and I'll be helping to facilitate today's webinar. We're thrilled to have so many of you joining us today. I think we have about 78 folks online, and it's increasing as we go. So as Angie said, during today's presentation, we're going to provide a quick overview of the paid leave law. We're going to talk about steps that hospitality employers can take now to prepare for January 1st, and we're going to walk through the seasonal hospitality employment exemption process, and we'll reserve the remaining time to answer your questions. We also have a lot of information on our website, info.paidleave.mn.gov, including frequently asked questions and an employer toolkit, which we continually update. I'll also note that following today's webinar, the slides will be posted to the Paid Leave website on our public events page under the About Us tab. Today's webinar will be recorded for training purposes, and should we decide at a later date to make the recording public, we will post a link to our website and notify everyone who registered. Additionally, we send out regular email updates about paid leave, and you can subscribe on our website. By the way, my team member, Julie, is putting all of these links I just mentioned in the chat. So we'll start with about a 40-minute presentation from Greg and Jim, followed by a Q&A. And for that Q&A session, you can submit your questions to us using the chat button. You can find the chat button at the top of your screen. It's a purple speech bubble with a question mark on it. There are two tabs in that chat, the Featured tab and the My Questions tab. Check the Featured tab to see announcements from our team and the links that we mentioned throughout the presentation. Use the My Questions tab to ask a question anytime during the presentation. Only you and the webinar team can see your question. Likewise, other attendees will only see their own questions. Our team behind the scenes will review and moderate the questions for the Q&A. We may not get to all of your questions, but please ask them anyway. We keep track of all questions and we use them to inform our outreach and update our FAQs on the website. And if we don't get to your question, the Paid Leave Contact Center is ready to help you anytime. Just reach out to them by calling 651-556-7777, Monday through Friday, 8 to 4 p.m. All right, that's enough for me. It's time for the presentation. Turning it over to you, Greg.
Thanks, Linda, and thanks, Angie, Hannah, and the whole Hospitality Minnesota team for having us on today. We've been working on this project, or to get the paid leave program up, for just over 2 years now, and it has been quite the ride. There's still 72 days left until we go live with paid leave for the state of Minnesota, and when you hear that number 72, you may feel some anxiety, but 72 days means that there's still plenty of time to get yourself and your business ready for the program. So as Linda mentioned, today we're going to give you a quick overview of what paid leave is, as well as a deep dive into the seasonal hospitality designation process that's recently went live. We'll also, Jim, the UI Division Director, and I will also have some time for a Q&A at the end to make sure that we have all of your questions answered. So let's just jump straight in. First, just generally about the paid leave program. We're going to talk about who's covered by paid leave, what does that mean, and what do benefits and job protections look like under this program. So the paid leave law was enacted in the 2023 legislative session, and it's going to start on January 1st of next year. What this program does is it creates a paid family and medical leave insurance program that's going to offer both job protections and partial wage payments from the state to individuals while they take a qualified leave under the program. This is an insurance program, and much like private insurance, it's funded by premiums. Those premiums are split up between a contribution between an employer and an employee. And unlike programs like ESST, where an employer is responsible for making payments to an employee while they're out, under the paid leave program, those benefit payments are made directly by the state to qualified individuals while they are out on leave. This is the program on a page. When you hear paid leave, it's really two lines of coverage: family leave and medical leave. Medical leave is exactly what it sounds like. It's time off to care for yourself when you have a serious healthcare condition that requires you to be absent for work for an appreciable amount of time. Now, that appreciable amount of time is an important concept here, because this is not for day-to-day absences that are going to keep you out of work for a short period of time like ESST. Instead, in order to qualify for leave under the paid leave program, any qualifying event has to last at least 7 days, and in all situations will need to be certified by a healthcare provider that you require the time away from work. So that's medical leave. It's time to care for yourself. Family leave is a little bit broader. It includes time off to welcome a child into your home, whether that's through birth, foster care, or adoption, time to care for a family member with their own serious healthcare condition, as well as providing support to survivors of domestic violence and sexual assault, and to our members of our military during an active duty deployment, whether domestically or abroad. The program offers up to 12 weeks of medical leave or 12 weeks of family leave within a benefit year. A benefit year is an insurance term that just means a 52-week period starting on the date of first absence. So from the first day that you go out on leave, during the next 52 weeks, you are eligible for up to 12 weeks of medical leave or 12 weeks of family leave during that time. Now, there are situations where an individual may need both family and medical leave during the course of a benefit year. The most common is a birth-giving parent. A parent that gives birth may need to take medical leave in order to recover from pregnancy. That can be either prenatal or postnatal care. And then they can transition into bonding leave to welcome that child into their home. In those cases, instead of having 12 weeks or 12 weeks, the parent would be eligible for up to 20 weeks during the benefit year. So 12 weeks of medical leave or 12 weeks of family leave. If you take both, you're eligible for up to 20 in total. Our program is extremely broad in its coverage. It covers nearly all Minnesota workers and all Minnesota employers. That includes employers and employees that aren't required to participate in other state or federal programs like ESST or FMLA. Our program covers full-time, part-time, interns, temporary, and most seasonal workers are required to participate in the program. It's a fairly safe bet that if you're performing services in the state of Minnesota for wages, you are covered under the paid leave program. The only exceptions are for independent contractors, self-employed individuals, and tribal nations. These groups are not required to participate in the program. However, they'll be given the opportunity to opt into coverage if they choose to do so. Additionally, because we are a state-funded program, we cannot cover federal government employees. That includes the federal government and its instrumentalities, as well as railroad employees who are covered under the Railroad Workers Unemployment Trust. Then there's this small, narrow exclusion for designated seasonal hospitality employees, which we're going to talk about in some depth today. One concept that's really important to know before that is this concept of what happens if I have employees that work in multiple states. This comes down to a concept called localization. which means where is the majority of your work happening during the year? Under paid leave, if you spend 50% or more of your time working in a single state, your work is localized to that state. If that state is Minnesota, then you are required to participate in the paid leave program. Now, this is where the work is physically happening. So if you're a remote worker that's working, say in Hudson, Wisconsin for 3 days out of the normal week, even if your employer is located in Stillwater, you would not be covered under the paid leave program because you're spending the majority of your time in Wisconsin, physically working in Wisconsin. However, if the situation was switched with an employee working 3 days a week in Stillwater for an employer that's located in Hudson, Wisconsin, they would still be covered by the paid leave program because the majority of their work is physically happening in the state of Minnesota. This has implications for remote workers, as well as workers who split their time between multiple states. But that test is pretty straightforward. It's where do you spend the majority of your time working? And if it's in a single state, your work is localized there. Now, there are situations where an employee may spend time in more than 2 states during the year. And in that case, if they don't spend 50% or more of their time in a single state, then and only then does it matter where the employee lives. So we have a few scenarios to kind of help make this topic make a little more sense. I see we already have the answer for the first one up, but my business is located in Minnesota, but some of my employees live in Wisconsin. Are they covered? This question is difficult because you don't have all the information that you need. It doesn't matter that the business is located in Minnesota or Wisconsin. It doesn't matter where the employees live in most situations. Instead, it depends on where the employees are physically working. So if they're physically working in Minnesota, then they would be covered. If they're physically working in Wisconsin, they would not. The second scenario, my business is located in Wisconsin, but some of my employees work remotely in Minnesota. Are they covered? The answer here would be yes, assuming that they're working more than 50% of their time in Minnesota. Remote work, even if you're working for a business that's located in a different state, if you're physically working remotely for that employer in the state of Minnesota, you would be covered under the paid leave law. The last scenario, I work in multiple states, but I live in Minnesota. Am I covered? This comes down to 2 different tests. First, even if you work in more than 2 states, do you spend 50% or more of your time in any one of those states? If not, then and only then does it matter if you live in Minnesota. So if you spend less than 50% in all of your time in all of those states, but you live in Minnesota, you would be covered under the paid leave law. So that's who's covered by paid leave. Let's talk a little bit about what it means to be covered. There's 2 parts of the law. There's the employment protections and the partial wage replacements that are available to employees when they have a qualifying condition. The employment protection provisions of the statute are chiefly administered by the Department of Labor and Industry. And for larger businesses, they probably feel somewhat familiar because they're fairly close to what is required under the federal FMLA program. However, under our program, these employment protections apply to both large and small businesses. At a high level, some of the employment protections that are available under the paid leave program include the right to reinstatement. If an employee has worked for more than 90 days or been employed for more than 90 days, they need to be restored to their job or an equivalent position when they come back. For this particular audience, I think it's worth noting that if the job was scheduled to end during the course of the absence, that obligation to restore the individual to the job does not exist. If the job doesn't exist when the person comes back because of the end of the season or the end of their scheduled contract, there's no obligation to bring that person back to your business. The next one, health insurance continuation. Generally speaking, employers must continue to fund their portion of the healthcare and group insurance premiums while an employee is out on leave. If you are paying an employer portion of the premium, you need to continue to fund it at that level while the employee is out. You are, however, able to require the employee to continue to pay their portion. And that can be done in a number of different ways, including having the employee pre-fund their contributions before going out, paying back when they return, or if you choose to offer something like supplemental payments, using that as a base to deduct against while the employee is out on leave. Last, the law has some pretty stringent anti-retaliation and anti-interference provisions. Employees have a right to leave under the paid leave program, and an employer cannot interfere with or retaliate against any employee that is taken an action under the statute. An action under the statute can be as small as saying that they want to take leave under the program. Additionally, employers cannot redirect paid leave payments to pay a debt that the employee may owe them. When an employee is away, they can take leave in different leave schedules. They can take leave in one big block of time, which is called continuous leave, or they can take leave in smaller blocks of time over a longer time period. That's called intermittent leave. We'll talk a little bit more about intermittent leave later on in the presentation. So that's the leave part of paid leave. Let's talk a little bit about the paid part of paid leave. So unlike programs like the Pregnancy and Parental Leave Program or FMLA, one of the big distinguishing features of our program is that when an individual has a qualifying event, they are paid while they are away. Now, these are partial wage replacements that are based off of what the employee was earning prior to going out on leave. And these are awarded on a progressive scale, meaning that wages that between 0 and 50% of the statewide are replaced at a higher percentage than wages between 50 and 100% of the statewide or beyond. The actual math is that the first tranche of wages between 0 and 50% of the statewide average weekly wage are replaced at 90%. Wages between 51 and 100% of the statewide average weekly wage are replaced at 66%. And wages above that are replaced at 55%, up to a maximum benefit that's equal to the statewide average weekly wage, which when we go live will be $1,423 per week. That math may not be totally intuitive, but we do have tools to help you and your employees be able to estimate this before they apply. If you take a look at our website, we do have a calculator available to help estimate what these benefit payments will look like. Now, in order to qualify for partial wage replacements during a leave, there's a earnings threshold, a financial eligibility threshold that's equal to 5.3% of the statewide average annual wage. This number is $3,900 when we go live. Now, you could have earned that $3,900 from one employer or from multiple employers during the previous 4 completed calendar quarters. Your wages follow you between employment. Now, for this audience, it's also probably worth mentioning that there's no minimum threshold to be subject to premium payments. So even if you're hiring a temporary worker and you're only going to pay them $1,000 for their work, those wages are still subject to paid leave premiums, and they count towards that individual's financial eligibility across multiple employers. So those wages would also be reported to the division. It's a fairly low barrier to entry with having to earn just under $4,000 within the last year. But if you have earned that amount, it is worth noting that if you're also receiving payments from the Unemployment Insurance Division, Workers' Compensation, or Social Security Disability Insurance during an absence, you're not eligible for paid leave payments at the same time. We'll ask about each one of these payment types during the application process. We'll share that information with the employer, and we'll also be checking our own administrative data to ensure that folks aren't getting paid from multiple programs at the same time. These benefits are funded, much like through private insurance, through premiums. Those premiums are split between an employer portion and an employee portion. When we go live in January, the premium rate will be 0.88% of wages up to the Social Security cap, which is $176,000. Those first premium payments are due on April 30th, 2026, and should be applied on wages paid between January 1st and the end of March. So the typical premium rate is 0.88% of wages. And by default, an employer is able to deduct up to half of that number in order to fund the employee's premium, which means that for a typical employee, an employer can deduct up to 0.44% of wages to fund the employee portion of their premium. For small employers, there's a reduced premium. Now, small employers under the program meet two qualifying conditions. First, they have 30 or fewer employees, and the average employee makes less than 150% of the statewide average annual wage, which is about $107,000. If you fall into that criteria that you have under 30 or fewer employees, and your average employee doesn't make over $107,000, then we will automatically designate you as a small employer, and you'll owe a reduced premium. That reduced premium is 0.66% of wages instead of 0.88% of wages. However, small employers are still able to deduct up to 0.44% of employee wages to fund their portion of the premium. So the reduction is really on the employer's side rather than the employee side. They can choose to pick up more than that premium if they want to. However, they're only required to fund 0.22% of wages as a small employer for the benefit. Additionally, for this audience, on January 1st, we're not only going live with employment protections and partial wage replacements, we're also launching small employer assistance grants. For that same population that's eligible for the reduced premium, when an employee goes out on leave, there's limited grant funding available to support you during their absence. This grant funding is up to $3,000 per leave, with a cap of $6,000 per employer per year. This funding can be used to hire temporary workers, increase existing workers' wages in order to cover for an individual while they're out on leave, and it can also be used for employment-related costs, including training workers, so you have a workforce that's able to cover for an employee while they're out on leave. This funding will be available starting on January 1st of this year. Now we want to shift gears a little bit and start deep diving into what the seasonal hospitality employment designation actually is. So as we mentioned, our program is extremely broad in its coverage, and it covers employees that are otherwise exempt from programs like Earned Sick and Safe Time or FMLA. But there is this narrow exclusion for what are called seasonal employees in the statute that has some pretty narrow inclusion criteria that we're going to go through. And we have Director Jim Hegman on the line today also to talk through how you can tactically apply to have your employees designated as seasonal employees. So here's what it is. Most seasonal and hospitality workers are covered under the program. And as a default, they are all covered under the program. However, certain seasonal hospitality employers can request a special designation for some of their employees to be listed under seasonal hospitality employment. If you request this designation and your request is approved, then those employees who you've designated are unable to take paid leave specifically from your business, and you will not owe premiums on the wages that you pay. if an employee were to be absent for a qualifying condition, you wouldn't be required to restore that individual to a previously existing position, nor would you be required to continue to fund healthcare insurance or any of the similar employment protections would not apply. Now, in order to designate an employee as qualifying under seasonal hospitality employment, you're going to need to submit a request to the state that you meet 3 criteria. Criteria number 1 is that you are an employer in the hospitality industry, which we'll talk about what that means on the next slide. Second, your organization must also qualify as seasonal, which has a gross receipts requirement around it, which we'll talk about as well. And then third, all of the employees that you designate can only work up to 150, can only be employed 150 days during a 52-week period. To dive into each one of those in a little bit of depth, hospitality employers. So in order to be approved for this designation, your business has to be in the hospitality industry. Hospitality is defined in our statute, and it lists out the types of businesses that qualify, including restaurants, hotels, motels, lodges, resorts, food stands, food trucks, school or special event concession stands, mobile and seasonal food businesses. These are the employers that are specifically called out as fitting into hospitality for the purposes of the statute. There are other employers that may work on a seasonal basis. They may be involved in something that seems close to hospitality, but if they don't fit into these criteria of businesses, the designation process does not apply. Next, the business has to be seasonal. In order to be seasonal, an employer has to earn most of their revenue within 6 months of the year. In fact, it means that you need to get at least 2/3 of your revenue in 6 months of the year compared to the other 6 months of the year. Now, as part of the application process, we're going to require that you submit receipts for gross receipts for each month of the previous calendar year. The gross receipts from the 6th highest month must be 3 times greater than the receipts from your 6th lowest months. Now, because we get the question sometimes, these months don't necessarily have to be consecutive. It's pick 6 months, and as long as those are 3 times more than the other 6 months, then it would qualify as a seasonal business. The example that we have here, where we have an employer that this actually does end up with consecutive months, but between January and June, they only have $100,000 of gross receipts. And then from July to December, they have $300,000 worth of receipts. That would qualify as a seasonal business. However, if this number was 200,000, they would not qualify as a seasonal business. And last, if you meet those 2 criteria, that you're both a seasonal employer and you're in the hospitality industry, this exclusion only applies to employees that work less than or 150 days or less in a 52-week period. Those days also do not need to be consecutive, but it's worth calling out that these are days of employment, not days that they actually work. So if you hire them for a period of 3 months, all of the days, including weekends, count towards that 150-day threshold. This 52-week period can start at any time. It does not need to be a calendar year. If you have employees that will meet this designation in multiple years, then you'll need to apply to designate them each year that after their designation expires. From there, I'm going to turn over to Jim Hegman, who's the director of the UI division, to talk a little bit about how this process actually works to designate an employee.
Great. Thank you, Greg. Hopefully everyone can hear me. Great. Again, I want to add my thanks to everyone for taking some time this morning to go over this information with us. To take a step back for just a second here, if you've been kind of keeping up with the paid leave activities that are going on, then you'll know that UI has been partnering with paid leave on the employer side of activities primarily to assist as we can with making this process and these transitions just a little bit easier for employers. So employer initial registration takes place through what we would normally call the UI program, but our interface, but that's actually shared joint accounts now, and then wage details and ultimately paid leave premiums will be entered in that same system. So along those lines, we're going to kind of walk through sort of quickly how one would request to be designated as a seasonal hospitality employer in order to take part in that exception to what is otherwise paid leave coverage. I need to say at this point as well that the seasonal hospitality exception applies only to paid leave. There is no such exception for UI. And we'll chat about that a little bit later, I think, in one of the Q&As that we have about the difference for those things. So the first step, we usually have everyone start out at www.uimn.org. That's kind of the main landing page for the unemployment insurance program and for employers to work into their paid leave and joint accounts on that side of things. We ask folks to start there because occasionally there'll be announcements at the front of it. From that page, you'll be able to click on employer and agent as an option near the for the first homepage there. And then on the left-hand side, you will see some paid leave content. So you can click on links for paid leave content once you're in the employer agent side of the website. For this particular process, we're going to suggest for this part of the process, we're going to suggest that you would log into your account. So you go into uimn.org and then select employer agent. And then when you get to that page, then you'd select login and select employer. From that page, then, which we can call your home page, you can select paid leave. That's in the menu of options that you have. And it's also on what we call the left nav. So it's the left navigation pane on that window. And you can, from there, select paid leave requests. So paid leave requests is a term that we're using for employers that are making a request of some sort. And in this case, the request is to request to be a seasonal employee to get the seasonal employee designation. So we're going to display the request information page. I think we can go on to the next one here. And there we can, you can fill out the request and fill out a few questions for us. It's fairly straightforward. I think there's 4 or 5 questions. It's not very detailed. The main thing we want you to know is that we need you to print and include a cover letter along with your submission. So it's going to ask, we're going to ask you for some information. You're going to have to send that information to us. And it's real important that you include the cover letter with that. That'll allow us to more quickly process your request. So the cover letter is going to have a barcode in the top. If you're familiar with unemployment insurance, you've seen these before. The barcode on the letter helps us to orientate all the information you've provided into the item that's related to your request for the seasonal designation. So it's important that you include that letter or that cover letter, and then we get it back with the information that you provide. The things that we're expecting to be attached to this will be some supporting documentation, including gross receipts for the previous calendar year. And you can see the definition of that, and Greg's spoken about already, and a list of the employees that you would wish to have designated as seasonal. So they're going to be folks that had worked no more than 150 calendar days in a consecutive 52-week period. We'll need first and last names, social security numbers, employment start and end dates. That can be included in submission that you provide, and again, with the cover letter attached to it. You'll mail all of this to the paid leave PO box here in St. Paul. Once it comes in, the paid leave folks, so that'll be done by the paid leave division, not the UI division, but they'll review your information and issue a determination based on that. You need to make sure that you're continuing to submit all wage detail reports, particularly for the UI folks, because again, the seasonal provision does not apply to them. Submit a quarterly seasonal hospitality list. That functionality is getting stood up right now, and then notify the paid leave program within 5 business days if you don't meet the definition any longer, or if you need to add or presumably subtract folks from your designated paid leave seasonal hospitality worker list. So it should be fairly straightforward, fairly familiar to folks that that have done UI things before. So process will look pretty familiar. And then once we've got all that information, then a determination will be issued that'll either approve or not approve. Again, this seasonal designation is not automatic, so you have to ask first of all. And it may be that some employers might say submit something, but their workers are all over 150 days, or they don't meet one of the other thresholds. If that's the case, then you would not receive the seasonal designation. And I think we're back to Greg at this point.
Yeah. Thanks so much, Jim. And, do also publicly want to say thank you to the UI division for all their partnership throughout the implementation process. This process is as simple as it sounds because of the great work that happens over at Jim's shop every day and being able to set this up in a way that makes sense for employers as well as the division. So after we complete this process of designating an individual, you've sent in the cover letter with the supporting documentation that that your business is both seasonal and in hospitality, and you've given us a list of employees that you wish to designate as seasonal employees and not required to participate in the program. The last requirement here is that you notify those employees in writing of their status as being covered under the seasonal hospitality designation. We'll make this notice available following your submission, and we'll have it available in multiple languages. You will, in the future, need to notify folks when you offer them the job, or if you have current employees that are working for you today in a seasonal manner, you need to notify them by December 1st of this year if they're already employed. For each one of these, it's best practice and it's worth getting written or electronic acknowledgement that each employee has received this information, so they are aware that they're not covered under the paid leave program. If an employee refuses to acknowledge this documentation, that doesn't mean that the designation is not valid, but we will ask you to document how you notify these employees in case there is a dispute later on. This is an important part, and it is required by statute that the employer do notify their employees of their designation status. If they fail to do so, there could be penalties, including up to the loss of that designation status. So that's the seasonal hospitality designation, but now I just want to take a couple steps back and talk about we are 72 days away from launching the program. What can you do as an employer for the rest of your employees or for the rest of your business in order to get ready? So there's 3 easy steps that you can take as an employer today in order to get ready for January 1st and make paid leave a success for your business. They are setting up your accounts, notifying your employees, and looking at policies that can help customize paid leave to work for your specific business. So in step 1, there's 2 separate accounts under the program. There's the employer account, which is at uimn.org, and there's a separate administrator account, which we've been building with HR professionals from across the state over the last 2 years in order to provide employers with transparency and actionable information for when an employee requests leave under the program. Within the employer account, that's where you're currently submitting wage detail reports. It's also where you will pay premiums to fund the program. And as you saw, it's where you can designate employees as seasonal and not required to participate in the program. An additional piece of functionality within the UI system is the ability to designate a leave administrator for the paid leave program. By designating a paid leave administrator, that's a person who will have a direct line to the business when the program goes live and will give you transparency into when an employee requests leave, as well as being able to apply for things like the small employer assistance grants. That administrator account is currently live. After you designate an employee in the UI system, You're then able to set up an administrator account at paidleave.mn.gov, and that's going to be your primary point of contact with the division when employees go out. I will note that if you have a particularly complex business, you could have one or more than one administrator. You could also serve as a paid leave administrator for one or more businesses if that's what works best for your business. Step 2, after you've got your account set up, you need to notify your employees. Now, for most employers, there's 2 notification requirements. The first being displaying a workforce poster in English and in any language spoken by 5 or more employees or independent contractors. This feels familiar. This looks a lot like other wage and hour programs, including FMLA or programs like ESST. We have this poster available today in multiple languages, available for download. You can also order it for free from the Department of Labor and Industry. So that's the first notification requirement, is displaying that workforce poster. The second is notifying each of your individual employees directly in their native language of coverage under the program, and the premiums are going to be deducted from their pay. Each employee, much like we just talked about with the seasonal hospitality designation, needs to be informed, and they need to provide either written or electronic acknowledgement of receipt of that notification. We do have a templated model notification available on our website today. You don't have to use our model notification if something works better for your business, but that the model that we have online would keep you in compliance with this requirement. Now, for the group folks on the phone today that may be taking advantage of the seasonal employment designation, they also, by December 1st, need to notify those employees who are going to be designated as seasonal and not able to participate in the program as well. In both cases, whether it's an employee that is taking part in the program or an employee that is a seasonal employee and not required to participate, both of those groups of employees need to be notified by December 1st of this year. So that's step 2. So at this point, you have set up your accounts with your employer account and your leave administrator account, and you've notified your employees about the program. Step 3 is really about making sure that paid leave works specifically for your workplace. If you take the first 2 steps, you're actually in compliance with everything that the law requires on day 1. However, there's still decisions that you can make as an employer to customize how paid leave works for you. Some of the decisions that you can make include deciding how to split and collect premiums. The 0.44% of employee wages that you can deduct to fund their portion of the premium is a maximum. You could choose to pay more than the required employer minimum for some or all of your employees. It's a decision that is up to the employer. Additionally, figuring out how you want to coordinate paid leave with additional benefits. Almost any payment that an employer makes to an employee during the course of a leave can be qualified as either a supplemental benefit or a substitute payment. If it's a supplemental benefit, you top off the benefit that somebody is receiving from the state, making up the difference between partial and full wage replacement. The decision to offer supplemental benefits lives with the employer. However, an employee may still receive other payments from their employer during the course of their leave, and if the employer does not designate them as supplemental payments, they're what are called substitute payments, which means that they happen instead of receiving a benefit from the division. So, and we do have tons of resources available on our website to help explain the difference between supplemental and substitute payments. If you want to coordinate how those payments work when an employee goes out on leave. You are also, as an employer, able to enforce your standard and customary leave notification policies, meaning that you can require employees to call a specific number, talk to a particular person, send an email to a particular inbox as part of their notification requirement. In all cases, an employee is required to notify their employer prior to applying for benefits with the division. and you as the employer are able to enforce your regular and customary notification requirements. And then last, intermittent leave. There's under the program, we talked about that employees can take leave either in one big block of time or in smaller blocks of time over a longer time period. In that second case, the employer gets to decide how big that block is. Depending on what works for your business and how you're administering other types of leave, you can have a leave increments that could go down to a minute, 15 minutes, an hour. You could have employees only take leave in 4-hour blocks or entire day blocks, depending on what works best for your business. Additionally, an employer is required to offer up to 480 hours of intermittent leave during a benefit year. However, if an employee needs more leave than that, more intermittent leave than that, the employer then also does have the option to require the employee to use the remainder of their time continuously in one big block instead of continuing their intermittent leave schedule. We have a ton more information about these policies that you can set as an employer available on our website, as well as 3 major steps that you can take to get your business ready for January 1st. One other area that I do want to touch on briefly is tax treatment. So the IRS issued guidance regarding the tax treatment of both premiums and benefit payments for state-run paid leave programs. And we wanted to make sure that you have transparency into what this process looks like and some confidence that you're able to maintain compliance once the program goes live. Some quick facts. The premiums are going to be collected on post-tax wages. And anything that an employer contributes, whether it's a required portion or an optional portion, is tax deductible. But if it's the required portion, it's an excise tax. If you pick up more than what you're required to pick up, that can be an ordinary and necessary business expense. Employers each year should report the employee contribution and any of the optional pickup that they choose to pay for their employees in box 14 of the W-2, listed as MNPFML. That actually, in all cases, should equal 0.44% of an employee's wages. So that's the premium side. On the benefit side, the IRS had issued additional guidance that said that state-run paid leave programs should operate the same way that third-party payers operate. So according to that guidance, family leave payments are not considered wages, which means that at the end of the year, for any employee that's taken leave for bonding, welcoming a new child into their home, caring for a family member, their own safety, or for military leave, the state will issue a 1099 for those benefits at the end of the year, and the employer will have no reporting requirement. However, with medical leave payments, it's a little more complex because according to the IRS guidance, medical leave payments that are attributable to the employer's contribution are taxable and should be counted as wages and are subject to Social Security and Medicare taxes. What this means is that for large employers, 50% of every payment that the department makes is considered wages and needs to be reported as imputed income on a W-2. We're going to be supporting employers through this process. We have set up a process within the Leave Administrator portal where businesses will be able to see all of the payments made by the division to one of your employees, as well as the tax liability that's associated with those payments. So for somebody that's receiving medical leave, there is an employer obligation we will fund the employee portion of the Social Security and Medicare taxes through the benefit payment that we make to the employee. The employer still needs to cover the employer portion of those taxes. And we will provide a CSV file that's downloadable within the Leave Administrator portal of all payments made, as well as a breakdown to what has been paid to the IRS and what the employer should pay in order to stay in compliance. We have a ton more resources on our website about taxes and paid leave. And we're also going to be adding a video in the near future with more of a deep dive into the tax treatment of paid leave premiums and payments. Okay, the last thing that we want to do, and I know that we're running up on time, so I'm going to go a little bit quickly, is to preview January 2026 and what it actually is going to look like when you administer leave. If we're leaving you with anything today, the one action that we would really encourage you to take is to make sure that your business does have that paid leave administrator designated so that you have access to this leave administrator portal. The leave administrator portal is something that we've been working on with HR professionals from across the state for the last 2 years, based off of what we've heard businesses need to see in order to make paid leave work for them. This paid leave administrator is a point of contact within your organization directly with paid leave. This is a person who's going to have access to be able to manage your account, to coordinate paid leave with other benefits. We'll give them information about all the payments that we make to an individual while they're out on leave. If you choose to request an equivalent plan and offer these benefits yourself, that application for an equivalent plan lives here with the paid leave administrator portal. And when somebody applies for paid leave through the state program, you'll be able to review all of the applications that have been submitted by employees, as well as track previous applications and when employees are going to return to work. This is also where you'll find the application for small employer assistance funding when that grant program goes live on January 1st. As I mentioned, in all cases, when an employee applies for leave with paid leave, it starts with a conversation between the employee and the employer. And in all cases, we will ask the employee if they notified their employer. If so, how and when did they do so? After they say that they have notified their employer, they start an application with paid leave, either over the phone or through our online application. And when they hit submit, the paid leave administrator gets an email that a request for absence has been submitted and that there's information for you to review. You'll have 7 days to respond to that request for information, but you're able to respond to it on day 1. So the quickest way to an approval for your employees is to make sure that you're on the same page as they are when they apply to the division. After that review comes back, the division will use information provided by the employee, the employer, the healthcare provider, and our own administrative data to make a decision for an approval or denial. And when we make that decision, we'll notify both the employee and the administrator of that decision. This is what it looks like. So in every application, after you get in request for information, you'll be given a one-page questionnaire that shows a lot of the information that an employee submitted as part of their application for leave. This includes whether or not you were notified, and if not, then do you want to stop the application or is it okay? The dates on which they're going to be out, as well as the type of leave that they'll be taking, whether that's family or medical leave. Whether you're receiving paid time off instead of receiving a payment from the division. And if you're choosing instead to top off benefits, we'll ask you what on every application if you intend to do so. And if you do, we'll just ask you to make sure that you don't pay more than what the employee was earning prior to going out on leave. In the future, you'll also be able to report other leaves that maybe aren't in our system to start. This is also as part of the leave administrator portal. I'll flag again, this is where you're able to track the status of applications, view past determinations, as well as apply for an equivalent plan if you're choosing to offer these benefits yourself instead of going through the state plan. And it's also where you'll be able to access benefit information that you need in order to stay in compliance with that IRS guidance. I want to again thank Angie, Hannah, and the whole Hospitality Minnesota team for the opportunity to speak with you all today. We've been talking with employers and other stakeholders a lot over the last 2 years. In fact, we've held over 300 engagement sessions with a variety of stakeholders to answer questions and gather input as we've been building the program. But one thing I want to make sure that you know is that the conversation does not stop on January 1st. We want to be your partners in making this program the best that it can be, which means that we're going to constantly be looking for feedback and ways to improve the program. We've learned a lot from employers as we've been building this program. They're the reason why we put wage detail in a system that employers already know and trust. They've supported our rules to help make the program implementable. They've helped us design the equivalent plans process where
employers are able to offer these benefits themselves rather than going through the state plan. And last, the entire Leave Administrator portal was built with HR professionals from across the state in order to make something that really provides transparency and accurate, actionable information for employers when an employee goes out on leave. This commitment is real. Within the Paid Leave Administrator portal, you'll see there's a feedback button where you'll be able to provide feedback at any time during the course of once the program goes live. We're looking for direct feedback from users, ways that we can identify pain points, improve usability, and make sure that the tools and processes meet real-world needs. So like I said, January 1st may be the end of the implementation effort, but it's just the beginning of our relationship together. And we're so thankful for all the support that we've had so far to make the program what it's going to be on January 1st, and so excited for what it's going to be in the future. So one last part, just to flag, there are tons of ways to stay engaged with us. Checking our website, we're frequently updating that with new tools and resources for all of our stakeholders, including the 3 steps that employers should be taking today to be ready for January 1st. We have frequently asked questions that come from employers just like you, as well as those calculators that I mentioned that help you estimate both premiums and benefits. You can sign up for your paid leave account for your employer accounts or your leave administrator accounts. You can also sign up for our newsletter or send us questions. As Linda mentioned, we have a contact center standing by. They're actually open from 8 to 4 p.m. Monday through Friday, except state holidays, and that number is 651-556-7777. So thank you all for the time today, and Angie, Linda, ready for questions.
Thank you so much, Greg and Jim. We're going to transition over to our Q&A session. Remember, if we do not get to your question, please send them to our contact center. They are standing by and ready to help you. We're going to start off by answering some questions that were submitted in advance by participants, and then we'll open it up and answer some of the audience questions here today. Greg, we got a couple of questions about who's covered under paid leave. The first one is from an employer who says, I own a catering business and my children are my employees. Do they qualify for Minnesota paid leave?
Okay, yeah. So the question's really around employed family members. And while they're not required to participate in programs like the unemployment insurance program, they are nevertheless required to participate in paid leave. There is no exception for family members performing services in covered employment.
All right, this is also a similar question, has to do with the number of employees that a business has to have to qualify. Does the paid leave law apply to businesses with fewer than 10 employees?
Yes, it does. There's no minimum requirement. So unlike FMLA that only applies to businesses with 50 or more employees, there is no minimum employer size to be subject to paid leave. With that said, if you are a small business and you have 30 or fewer employees and that average employee makes less than $107,000 a year, there is a reduced premium, so it would be cheaper to participate in the state program. And there's also grant funding available when an employee goes out on leave.
All right, Jim, this one is to you. It has to do with reporting wages. Do employers report wages when they are earned or when they are paid?
Wages, thank you, Linda. Wages are reported when paid, not when earned. So an actual payment occurs, you issue your payroll check. That's the time period to which the wages are assigned.
All right, I'm going to skip around a little bit. We have a few questions about the seasonal employment exemption process. Greg, I'll put this one first to you. If the months do not need to be consecutive for gross receipts, does that mean that though it could be February, March, May, July, August, September, and December, that could be used as the months for that have the highest sales?
Yeah, sure. It doesn't need to be consecutive months. So if it was every other month or if it was some random assortment of months, that would not impact that calculation.
Great. So as I understand it, they could choose their highest sales months as those that meet that 2/3. All right.
Exactly. I mean, you would probably want to just list out like how much you earned each month and then separate that like top 6, bottom 6, and then use that to make your calculation.
All right, Jim, I'm going to pop over to you for this one. When it comes to applying for that exemption for seasonal hospitality employment, are employers able to submit the documentation via email or online somehow, or will it need to be sent physically in the mail?
Thanks, Linda. We're asking that you send it via mail at this time. We may have other features a little bit later on, but right now it needs to be by mail.
All right, so that will have to be submitted through physical mail. Thanks, Jim. All right, Greg, we're going to talk a little bit about what happens when an employee leaves someone's employment. This question comes from an employer who says, if an employee leaves before they're eligible with us to take paid leave, but later qualify within 26 weeks of leaving us, will the division notify the employer, and will they be asked to verify their application details? So again, someone leaves the employment, but then maybe later gets sick and applies within that 26 weeks. How will we be communicating with the employer?
Okay, so I want to answer that in kind of a few different ways, because like when we talk about being eligible for leave, there's, remember, the 2 parts of the program, the employment protections and the partial wage replacements. The right to restoration only exists 90 days following the date of hire while you're employed with the employee or the employer and you take leave. If you have a former employee that takes leave, you don't have to rehire them if they were not working for you at the time of that leave. On the benefit side, so if you have earned $3,900 across all of your employers and you apply with us, you'd be financially eligible. We would be that when you apply, you're applying against the employer from whom you are taking leave. So we would only share information with the employer from whom the employee is requesting leave. Even if you have paid base period wages to that individual, if you're not directly involved with the request for leave, we won't notify you and we won't require any sort of information to are part of the request for information.
All right, here is a question about deductions and tipped wages that earned tipped employees who earn tipped wages. How will taking deductions from minimum wage tipped employees work? And then related to that someone just wants to know whether tipped minimum wage employees can be charged the employee portion of the premium or not.
So we share the same definition of wages as the Unemployment Insurance Division, which chiefly would mean any payment made for services under covered employment. It qualifies as wages, including tips. So that tips would count towards your taxable base of wages that we're going to apply the premium to. The employer is responsible for submitting 0.88% in most cases. And it can be deducted from employee wages as long as it doesn't take them under minimum wage.
All right. Thanks, Greg, for that. And the last pre-submitted question, this is for you, Greg. Where are the best resources to keep us up to speed with the program and changes to the program?
I would say that, making sure that you check our website on a constant basis, that's one of the best resources that we have for getting information out there, but we also issue regular newsletters when something changes within the division. Being on our newsletter means that you get breaking news first.
All right, great. We're going to dive into some of the questions that have been submitted by participants here today. Thanks again to everyone who submitted your questions. And if we don't get to it, please do reach out to our contact center. They're available to help you. All right, first question, Greg. Will Minnesota Paid Leave provide a sample workplace policy template for employers, or maybe just in general, what is the division providing to employers to help them with these notices and other policy changes?
So another plug for our website. So we currently have both the workforce poster and a template for the notification, to the individual notification available for download on our website. You can use those today to notify your workforce. We also, we do a lot of webinars on topics like this, and we create resources specifically for employers, including the employer toolkit. It may not get down to sample workforce policies, or because of the differences between businesses would limit the utility of creating something like that. However, there's a lot of guidance on how these different processes work, as well as highlighting areas where employers have discretion in making a decision that helps customize paid leave for their business.
All right, Jim, this question is for you. I am an owner operator with an S Corp for a restaurant. Are both salaries and dividends subject to the 0.88% premiums for ownership? In other words, do these count as wages?
So wage definitions are pretty much identical between paid leave and the UI program. As it turns out, the owner officers of S Corps are not covered by UI, but are covered by paid leave. So to some extent, this is a paid leave question, but I can do a general answer for you. So if you pay yourself the W-2, my understanding is that would be considered wages for paid leave, not for UI without election to coverage. And then the dividends themselves would not be considered wages definitionally. So those would not have to be included. One of the caveats we always give for these things, it's what a thing is, not what it's called. So has to actually be dividends, and sort of not a term that's of art that's used for some other reason.
All right, Greg, I have a couple of healthcare continuation questions for you. The first one is, how can employers collect employees' portion of health insurance premiums?
So health and group insurance. So the requirement is that the employer continue to fund those benefits at the same rate that they were funding it prior to the employee going out on leave. So that leaves open the question of, if you were jointly funding these benefits with an employee, how do you collect their portion? Now, we've seen it in a few different ways. We've seen some employers that require the employee to write them a check for the amount of the healthcare contributions before going out on leave. We've seen other employers that wait until the employee come back and then collect it in arrears. If you're an employer that chooses to offer supplemental benefits, you could offset you could deduct the healthcare premiums from those supplemental benefits while an employee is out on leave. And we've also seen employers that, remembering that an employee often, most of the time, is going to create their plan for leave with their employer in advance of applying with the division. In those cases, with the consent of the employee, you may be able to deduct healthcare premiums in advance of the employee going out on leave in order to maintain the tax advantage status.
Okay, so it sounds like there are a few options available to employers to be able to recoup that portion of the insurance. Just quickly, does that health and care continuation also apply to vision insurance and vision and dental coverage?
Yeah, so the requirement's health and group insurance, which would be health, dental, vision as well.
All right, Greg, another employee here. This question is about an employee who has multiple jobs. So if an employee works multiple jobs, how will any particular company know how much to supplement their pay to ensure that it doesn't exceed 100% of the average weekly wage? Will the state let employers know how much employees are getting paid based on their pay from that specific company?
Yes, absolutely, we will. In these cases, I mean, if an employee has more than one employer, we don't want you as an employer to have to worry about this. This is part of the process that we're going to be absorbing as the division, making sure that payments are coordinated across employers participating in the state plan. But we will be sharing information with employers throughout the process, including the benefit amount that the individual is qualified to receive. The maximum supplemental benefit that the employer can pay can be calculated based off of that. We'll also, as part of the Leave Administrator portal, there'll be a payments tab. Within the payments tab, you'll be able to see all payments made to an individual employee broken down by week. And that'll be available for download using a CSV form.
Great, thanks, Greg. Real quick here, how does paid leave work for babies born in 2025? So if an employee has a baby in 2025 and takes some bonding leave, are they eligible to take bonding leave under paid leave in 2026?
Okay, so the way that this works is that paid leave program goes live on January 1st, 2026. And you're able to take bonding leave within 1 year of welcoming a child into your home, whether through birth, foster care, or adoption. Now, because the program goes live on January 1st, 2026, leaves taken before that date cannot be used to reduce the amount of leave that an individual is entitled to on January 1st, 2026. Which means that new parents that welcomed a child into their home in 2025 will be eligible to take paid leave up until the 1 year anniversary of welcoming that child into their home.
All right. Here's a question about J-1 visas. Will J-1 visa work and travel students be exempt from paid leave?
There is no specific exclusion on a particular visa type or employment relationship. So if they're providing services and covered employment, they would be covered under the paid leave program and subject to premiums.
All right, I know we're getting close to time here, so just wanted to know if we could put up our feedback survey real quick, and while we go through a few of these last questions, and then I'm going to hand it back over to Angie. All right, Greg, a couple more questions for you. Can you confirm that employers must meet all three of the conditions that were laid out to be able to designate employment as seasonal? So, and maybe just review quickly what those three conditions are.
Yeah, yep, they need to meet all three. They need to be in hospitality, one of the business types that we listed on the slide. They need to be seasonal, meaning that they earn 2/3 of their revenue in 6 months of the year. And they need to be, they need employees that work less than 150 days or less under the statute. So all three have to be true: seasonal, hospitality, and employees working 150 days or less.
All right, we're almost at time, folks. I want to thank everyone again for joining us. If we didn't get to your questions, please do send those, contact our contact center. They can help you out. And just as a final reminder, the slides from today's webinar will be posted to our website soon as they've gone through an accessibility review, and we'll notify all people who registered when that happens. And now I'm going to turn it over to Angie for some closing remarks.
Thank you, Linda. And thank you all so much for joining us today and for your engagement and questions throughout this important session. I want to especially thank Greg and Jim for their informative presentation and for taking the time to walk us through the details of the Minnesota Paid Family Leave Policy, and to Linda for facilitating that robust Q&A session. We are grateful for DEED's ongoing collaboration with the hospitality industry. To all of our attendees, thank you for investing your time today to learn about this program. We know that it's a lot to digest and plan for while you're busy running your businesses, but your commitment to staying informed and prepared is what will make this rollout as smooth as possible. And to that note, as you move forward, please remember to visit paidleave.mn.gov for resources, updates, and guidance, and also to set up your employer and administrator accounts at uimn.org. And as always, Hospitality Minnesota is here to support you through this transition, so don't hesitate to reach out to us with questions. We will have this webinar as well as all the supporting information located on our resources tab on our website, www.hospitalitymn.com. Thanks again for being here, and have a great day.